Here's the hourly price chart for GameStop Corporation, stock ticker GME. So as we can see here, the stock is trading under a bit of a fair amount of selling pressure here to start the week. We have now broken to new lows, which come in at 24.39. This is largely to be expected, given the fact that some of the Fibonacci levels that we've been watching previously have been broken. I was watching some, unfortunately, I was wasting my time watching some of the other, YouTubers that cover this stock. And none of them seem to be suggesting that this share price was ready to be moving lower like this. Not really sure how they're going to be explaining themselves in light of all of this. But this is roughly in line with, with the, level activity that I've been expecting here and that I've been watching. In particular, what I can point to here would be this trend wave here. As we can see here, I've left all these prior markings up on the chart here. So really what I'm looking at here is this current trend move higher. If we look back at the lows, this would mean that we're looking at lows of roughly 23.80. And then this extends to the highs, which came in at 29.79, which was this $30 price level that I've been watching as an expectation that this was where short sellers were going to start to emerge, and enter into the market with their new positions. Turns out this is exactly what's happening. I mean, that's 21 cents away from that top. So what is significant here is the fact that, we have broken through most of these, essentially all of these major Fibonacci levels. As we can see here, the 23.6% Fibonacci level, that would be this red zone up here, was broken, not quickly, I wouldn't say, but it was decisively broken during the July 17 trading session. This level came in at just below 28.40. And then, fairly quickly from there, we did fall through the 38% retracement as well. This was the 27.50 level. This ultimate price move here was significant because, as you can see, if we kind of move into this candle here a bit, this is a significantly red bearish candle, and it broke a couple of levels at the same time. So, really what we're kind of forcefully breaking through this yellow line here, which is the 20-hour exponential moving average, as well as the 38.2% Fibonacci retracement, which is this orange zone here. And then at the same time, I mean, we also broke through the 50% retracement, which is this green, kind of darker green line, and the 50-hour exponential moving average, which is the orange line here. So this was a decisive price movement, and everything kind of occurred at the same time here. So this is why, it's not surprising to see these price moves lower. I don't understand why a lot of other people just kind of find tweets on the internet and they just their videos, they're just kind of reading someone else's tweet rather than, looking at the price charts. I mean, these signals are being kind of conveyed in advance. So, we can see these things in anticipation and see when these price moves are most likely to occur to the downside. So, this is a significantly red bearish candle here. And it really did set the stock on a pace here to break through the main Fibonacci level that I watch, which is this 618 retracement, this 61.8% Fibonacci retracement. The reason that I say that this is the kind of most important Fibonacci level is because the entire Fibonacci, if anybody that knows any math, majored in any math or anything like that, the Fibonacci sequence is based on this number, the 618 retracement, the 61.8% Fibonacci figure. So as we can see here, this is a very, it's a significant price level. And then in addition to that, you've got this kind of rising purple line here, which is the 100-hour exponential moving average. So it kind of comes into contact, as you can see, with this kind of lighter blue, lighter green region. This purple line is roughly trading in the same area here. So, this is called a confluence of events. There's a combination of technical factors that are kind of developing in the same area. So a downside break here is substantial. It is significant, and it does need to be watched here. From there, all we really had supporting prices would have been this rising blue line here, which is the 200-hour exponential moving average. And then this sort of teal kind of, light green line, blue-green line, which would be the 786 retracement, which is another important Fibonacci number. So, now that we've broken through all of these levels, the next downside target does come in at this 2380 level. We have also broken through the psychological figure at 25, so that's important on its own. I try not to focus too much on these kind of round numbers, even numbers, because I think that they're just random numbers. I think $25 is a random number. Doesn't really have any special importance, but it does have a psychological effect on the market. Once these price levels start to go, some people start to buy. Some people start to buy or sell depending on what's happening at that level. So currently, we are seeing lows of 24.39. So this does mean that we have essentially lost this $25 mark. To the downside here, okay, so that's that the bad news is out of the way. Okay, so now the better news here would be that the potential for further declines here is now limited. We've really kind of seen this major price move lower, and it is a significant price move. I mean, I'm sure this doesn't feel very good if you're holding the stock. So we've seen this downside price move. The positive news here, though, is that the room to extend to the downside is now limited. And then in addition to that, we're seeing rising trading volumes here, sort of this green bar here, which does suggest that buyers are starting to step into the market and defend these lower price levels. As you can see here, this green bar kind of outstrips or outweighs the surrounding red bars. So to me, this does show a surge in buying activity, and it does suggest that people are starting to now buy at these lows. Okay, in addition to that, we do have to look at the indicator reading as well. Longer term, we can see that this uptrend in share price momentum has broken. This really kind of preceded all these declines here, and it was another indication that these declines were going to occur. If you just kind of look at this break here, sort of this trend line here, and then the purple line breaks below the white line. So that suggests that share price momentum has stopped moving in that direction and is ready to start moving lower. And this occurred before the share price action started to actually move lower on its own. So this was a leading indicator. It did show that this was likely to start happening. Okay, so all that said, what we do have to point to now is the fact that we're in oversold territory. We're kind of starting to base out at this point. You can see the purple line here has fallen below the 30 level in the relative strength index. That means that the stock is now oversold. So, what I said previously was that there's not much room here to extend to the downside. The next support level really comes in at 2380, and we're currently trading at 2480. So we've got a little bit more than say $1 in downside price potential, and this does match up pretty well with what we're seeing in the relative strength index, which does look like it's about to start to roll over out of oversold territory. So overall, what this means is that there have been declines. These moves have been significant, but I do expect to start to see prices to start to roll over here and start to find a bottom here relatively soon. The one other note that I have to make here is that the username for this account is going to be changing this week. So just sort of keep an eye out for that. All of the chart, everything else is going to look the same, but the username is going to be different. It's not going to be competitive technology anymore. So just keep an eye out for that. That will be changing this week. Here's the current market analysis for GameStop Corporation, stock ticker GME.